Most triangle breakouts fail. The first close outside the pattern looks like the breakout. Traders enter, set stops on the other side, and watch price snap back into the triangle and stop them out. Then, days later, the real breakout fires in the same or opposite direction with conviction. The difference between the false break and the real break is visible on the chart before you click its volume. Today, the volume rule that distinguishes false breakouts from real ones, the location filter that puts triangles in tradable context, and the retest entry that dramatically improves the win rate over chasing first closes. Here's the framework. A real triangle breakout has three components. 1. Volume expansion on the breakout candle, well above the prior average, ideally double. Light volume breakouts almost always fail. 2. A close outside the trend line, not just an intrabar wick. Wicks tell you nothing, closes confirm direction. 3. A successful retest of the broken trend line. Price expands, pulls back to retest the line from the new side, and holds. That hold is the highest probability entry, better win rate than chasing the initial breakout candle. Patience beats speed in triangle trading. Watch this in a synthetic triangle. Price compresses into a tight triangle for 30 bars. The first close prints just outside the upper boundary on light volume. A trader chases the break, buying immediately. Within 3 bars, price snaps back into the triangle, breaks below the lower boundary, and stops out the long position. The volume on the original break was light. It was a head fake, not a real breakout. The trader paid for the chase. Most first closes outside triangles look like this. The volume was telling them in advance. Here's the entry that wins more often. Skip the breakout candle. Watch for the breakout candle to close outside on heavy volume. That's the qualifier. Then wait. Within 1 to 5 bars, price typically pulls back to retest the broken trend line from the new side. If price holds the retest, touches the line and bounces, that's the real entry. The retest filters out the head fakes because head fakes don't retest cleanly, they snap back through. Pros wait for the retest, retail chases the break. Win rates differ by 20 percentage points or more in real backtests. Now the real trade. Triangle compresses, then breaks above on a wide range candle with volume double the prior average, strong confirmation. The trader doesn't chase. They wait for the inevitable pullback. Price retreats to retest the broken upper trend line, touches it and bounces. The trader enters long on the bounce candle, places a stop below the retest low, targets a measured move equal to the triangle's widest point. The volume confirmed direction. The retest confirmed it was real. The entry was clean. Patience won. On a real chart, set alerts at triangle boundaries, not orders. The alert fires, you check volume on the close. If volume is heavy, you watch for retest. If volume is light, you ignore and wait. The retest entry comes 1 to 5 bars later. The discipline of waiting for confirmation plus retest instead of chasing every first close is the difference between profitability and frustration in triangle trading. Most retail can't sit still long enough. Pros build their edge from that exact impatience. So most triangle breakouts fail because traders chase the first close instead of waiting for confirmation. Heavy volume marks the real break, and a successful retest of the broken trend line marks the clean entry. Skip the breakout candle, trade the retest. The win rate is dramatically higher and the math works in your favor. Subscribe for the full method and trade your own plan. Education, not financial advice.